Hello everyone and welcome back to my YouTube channel. My name is Pankaj. I deal in various financial products and also I am a financial investing advisor. Currently I am working on a series of robust Vanguard ETFs that can weather the storm of a downturn. If you want to diversify your ETF portfolio and get invested in dividend and capital growth for a longer term, then this video is for you to watch. Today I will be discussing one Vanguard ETF that is steered for growth, so watch this video until the end. Let's get started. Thank you again for joining me today. As always, everything shared in this video is for informational purposes only. But if you could do me a huge favor and hit that like button below, that would be a huge contribution in the growth of this channel going forward. In this video, I will show you one robust Vanguard ETF that can help you weather the storm of a downturn. This ETF offers a path to a more secure financial future, often outperforming the market, especially during times of potential market turbulence. This ETF can provide both capital appreciation and dividend earning potential. This Vanguard Growth ETF, known by the stock ticker VUG, Vanguard Growth ETF. I'll show the growth by taking the initial investment of $10,000 and keep invested for a longer term, let's say 10 year, 20 year, 30 year. This ETF is my first pick in the series. This ETF has a current dividend yield of around 0.6%. This might not look attractive from the dividend perspective, but for the long-term investment, you have to consider multiple key factors. First factor is there is the current dividend yield, which in VUG case is 0.52%. Second, you should consider how much this dividend has increased every year. In the case of this ETF, it has a 10-year CAGR compound annual growth rate of almost 5%. The third thing that you should look at how much its value has increased over the years, which can be determined from its past performance over the last 10 years. In the case of VUG, its share price has increased by an average of 14.73% every year over the last decade. I will show everything through a simple illustration here. And in this illustration, I am taking initial investment capital of $10,000. And in the second column, I have growth percentage every year, which is 14.73. In the third column, I have the dividend rate or dividend percentage every year, which is 0.52%. And in the rest of the column, I am going to show what's the growth income, what's the total growth, and what's the total wealth at the end of every year. That will be shown here in detail. So let's get into the details of this spreadsheet here. So taking $10,000 as initial investment, taking 14.73% as the growth, taking 0.52% as the dividend yield every year. So in the year one, you get like $52 as dividend and $1,473 as your capital growth or income, you could say. And taking all of this together, it comes to $1,525. So at the end of year one, your $10,000, which is your initial investment, has become $11,525. So you get a capital appreciation of $1,525. And if you see that year over year, your capital is growing from $10,000 to this as a total wealth. If we look at the end of year 10, which is your 10,000 has become $41,344. So total capital appreciation, if you see, if you take the addition of all this here, almost $31,344 of capital appreciation it has gone. If you keep them invested for a longer term, then at the end of year 20, that has become $170,930. If we look at the end of 30 years, then this has become almost more than $700,000. So in the last row, if I break this down, everything, $10,000 is the total investment, $23,000 is the dividend income, $672,000 is the growth income, and total growth is almost $700,000. So at the end of 30 years, your $10,000 has become $700,000. That's a great. So this kind of investment is great for the people who are in their early 30s or late 20s, so that you keep invested for longer term, and this should be a good return for the retirement income. This ETF has been around in the market for nearly 20 years, and it manages over $222 billion in assets. It is designed to invest in big American companies that are expected to grow a lot. What's interesting is that this ETF tries to avoid buying all the stocks at once to prevent prices from jumping around. This ETF also has a super low expense ratio of 0.04%, and you can easily buy and sell it because of the high demand and supply. It has a lot of its money in tech companies like Microsoft, Apple, Nvidia, Amazon, Meta, Google, Tesla, Visa, and many more. The total number of holdings in this fund is 211. So income-seeking investor would be wise to consider this Vanguard ETF. Even for those with more modest sums to invest, these funds can generate much needed retirement income. If you found this information valuable, don't forget to like, share, and subscribe for more financial insights. Until next time, happy investing. Thank you.